Welcome back. You're with us on Bazaar Morning Call, and the queues this morning across Asia are pretty thin because of the Lunar New Year holiday. We only have like Japan and Australia, the two major markets that are trading. Implied open is suggesting that we'll have a quiet start, but if the bulls can build on yesterday's big pullback, they will definitely like that. Let's talk about stocks because lots and lots of numbers have come through, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Sudarshan, Tata Motors, how is it looking?
It's a weak set of results. Earnings have missed estimates and margin has missed estimates despite PLI benefits coming in Q3 FY25. EBITDA is down 15%. Margin has come in at 11.5% versus our poll of 13.7% and against 13.9% in the same quarter last year. And that's mainly because of the demand, not only in the domestic business, also in China and Europe. For JLR, EBITDA margin is down 200 basis points and it has come in at 14.2%. EBIT margin has made a minor improvement of 20 bips and it has come at 9%. As far as outlook is concerned, JLR EBIT margin outlook of 8.5% or more has been retained. Also, companies say that cash flow positive on the guidance on cash flow positive also for JLR is maintained. As far as brokerage are concerned, they're largely negative. Jefferies has downgraded to underperform. Target is to be 660 per share. It has also cut FY25-27 EBITDA estimates by 7 to 11%. UBS has a sell call and target is to be 760 per share. It says it has ambitious Q4 amidst uncertain FY26 and 27. MS has an equal weight call, target is 853, while CLSA maintains outperform call and target is 930 per share.
Okay, all right. Thanks a lot for that. Sudarshan, not so good then for Tata Motors. But Abhishek, Bajaj Finance, good enough?
Well, a very strong set of numbers are coming in from Bajaj Finance. They have beaten our poll both with respect to NI and the PAT. So their capital adequacy ratio has remained stable despite the fact that annualized credit cost has increased for them to 2.16% from 2.13% in the previous quarter. The management did indicate in the con call that the worst is behind and now they expect the credit cost to moderate to about 200 to 205 basis points in Q4. Calculation shows that the net interest margin was largely stable at decline of only 2 basis points sequentially. The asset quality has seen slight deterioration. Gross NPA is up to 1.12% versus 1.06% in the previous quarter. In absolute value wise, 12.8% gain on gross NPA on a sequential basis. NII and PAT is ahead of our poll. Key con call highlights, they have given FY26 guidance wherein they estimate PAT growth of 22 to 23%, AUM growth of 25%, credit cost to be maintained at 2% provided that Q4 is around 200 to 205 basis points. A key highlight is the management transitions that they do anticipate. So they expect the board to take a decision on Rajiv Jain's at the group level by Q4 FY25 and that will be keenly watched by the street. Back to you.
Okay, all right. Abhishek, thank you very much for that. So Bajaj Finance in focus. Let's go back to auto, right? Tata Motors not so good. What about Maruti? Sud is here with details. So back to you.
So company announced earnings yesterday. Earnings were absolutely in line with estimates, but commentary is not looking that great. As far as demand is concerned, company says demand remains subdued, and especially on the urban front. In Q3, rural areas saw a growth of more than 15% or say 15%, while in urban area growth was just 2.5%. Also, retail growth for industry in FY25, earlier guidance for industry was 3 to 4%. As of 9-month FY25, company says industry has seen a growth of 3.5% and also expects in Q4 the growth to remain in the same range, that is not range, exactly at 3.5%. So demand remains a concern. Brokerages are largely positive on the stock. HSBC has a buy call, target is 14,000 per share. It says it sees domestic demand remaining muted in 2025, but export may be key driver in FY26 and FY27. MS has an overweight call and target is 14,942 per share. Nomura has a neutral call and target is 13,290 per share. It says domestic weakness is a risk to watch out for Q4. So earnings were in line, but commentary is muted. That's the reason I'm going with minor red for Maruti.
Okay, of course, respect for them because they're saying it as they see it and not sugarcoating it. But yes, from a market perspective, got it. Sudarshan will keep it in mind. Maybe some pressure this morning on Maruti. Let's talk about brighter things. SRF. Upasana is here with us. Upasana, numbers better than estimates after a long time, right?
Certainly, Surbhi. Well, good morning. Companies reported good set of numbers above street estimates. This good performance was mainly supported by companies Chemical business. Now, after several disappointing quarters, company has reported a 14% top-line growth, coupled with margin expansion of nearly about 120 basis points in company's chemical business. Now, overall EBITDA was mainly supported by packaging films business, which was offsetted by muted performance that was seen from company's technical textile business. Now, coming to numbers, revenue stood at 3,491 crore with an uptick of 14%, above street estimates. EBITDA stood at 619 crore, up 9%, certainly above street estimates, and which led to a margin expansion of nearly about, EBITDA margin stood at 17.7%, down about 18 basis points on a Y-on-Y basis, while street was estimated somewhere around 17.3%. PAT stood at 271% with an uptick of 7% on a Y-on-Y basis, and mind you, management has indicated that it is seeing gradual increase in demand in the chemical business and has also indicated that fluorochem business saw strong support from refrigerants. So overall, good set of numbers from SRF.
All right, thank you very much for that. Let's talk about Hitachi Energy next. And by the way, you'll hear from the management a little later in the program as well. But numbers first. Vamakshi, morning.
Well, good morning, Prashant. Yes, the numbers look good this time around. It's an operation-led beat. When we look at the revenue, that stood at 1,620 crores. This is an uptick of almost 27% on a year-on-year basis, and it has come in 1% below expectations. But operationally, the performance was very strong. When you look at the EBITDA margin, that has improved close to 500 basis points, coming in at 10.3% as compared to 5.3% in the same quarter last year. When we look at the net profit, on the other hand, it has surged multi-fold, and this is mainly on account of notional forex gain of somewhere around 52 crores. So adjusting for that notional forex gain, the net profit stood at 85.5 crores. But nevertheless, this is still nearly 8% higher as compared to what the street was anticipating. When we look at the ordering activity, that was also quite strong. Order inflow stood at 11,594 crores. This is a massive uptick as far as order inflow is concerned. Resultantly, this led to the highest ever order backlog of 18,944 crores. So overall, when we look at the numbers for the company, quite strong, going with the green for discount on the back of that.
Okay, all right, Vamakshi, got it. So blowout quarter for Hitachi Energy. We'll be speaking with the management as well, Mr. N. Venu, find out how much of this can sustain and how optimistic they are about the next financial year. We had both Blue Star and Voltas report numbers. Let's go back to Upasna for the details. Upasna?
First up, let me start with Blue Star. The company has reported a good set of numbers. Revenue and PAT in line with our poll, while margin stood above our poll. Now, growth was mainly led by companies' EMP and UCP segments, while EPC segment slumped. Now, revenue growth of 25%, which was much above the poll estimates, was led by strong festive season and robust sales in EMP segment. Now, let us come to the numbers first. Revenue stood at 2,807 crores with an uptick of 25%. EBITDA stood at 209 crore with an uptick of 35%. EBITDA margin increased by 50 basis points at 7.4%. And lastly, PAT stood at 132 crore with an uptick of 32%. Mind you that the UCP segment, the revenue grew 22% to 1,160 crores on a robust festive demand, leading the overall growth. Now, let me focus on Voltas now. The numbers missed the street estimates. This was largely driven by lower than anticipated UCP margins that the companies reported. Revenue in line, while PAT and margin lower than poll. Now, UCP segment revenue growth was in line at 20% on a Y-on-Y basis, but margins were weak, down about 240 basis points at 5.9%, likely on higher competitive intensity. Now, coming to the numbers, revenue saw an uptick of 18%, EBITDA margins was down 77 basis points at 6.3%, and PAT stood at 130 crore as compared to the poll of 155 crores. So all in all, weak set of numbers from Voltas.
Okay, all right. Thanks a lot for that, Upasana. And keep in mind, we'll be having the management of Blue Star as well, who will be joining us at 9:30 a.m. Let's hop across to Hormuz. He's here to tell us about Whirlpool. They sold some stake and they intend to sell more. Oopsie daisy. Tell us more, Hormas?
Morning, Nigel. Just a year after they did that, Whirlpool Corporation is back. They announced yesterday that they plan to bring their stake down in Whirlpool India to 20% by the mid or late 2025. Now, they also said is that they currently own around 51% stake. Now, remember, last February, they sold 24% or close to 25% stake in a block deal that was valued at well over 4,000 crore rupees. And even the CEO went on air and said that they sold that stake in the Indian unit because of high valuations. Now, they also said that the stake sale will be to ensure greater autonomy for Whirlpool India and that it will remain relevant to their overall portfolio despite the stake sale. Now, it is interesting because on February 20th, when the block deal happened, the average price was 1,280 rupees. The stock in the next 8 months went up 90%. And from those levels, the stock has already corrected almost 35-36%. So another stake sale in the offing for Whirlpool, an overhang gets created. Expect the stock to open in the red.
All right. Thank you very much, Hormuz, for that. What was that, Nigel? Whoopsie?
Whoopsie daisy.
You know, I hear all kinds of, I don't know, actually I shouldn't say it because I don't know what it means. Womp womp.
What? The whoopsie daisies I know, but I think not quite with it,
yeah, lingo,
with the times.
Next gen, new gen lingo, whatever. But, let's talk about, let's continue with our top 10 stocks here. Solar industries, right, is what we focus on. The Pinaka order has finally come through. I mean, if you remember, we had spoken with the management of solar industries and they were indicated that it should be out in the next a few weeks, basically, and it's come through. Big one. Upasana is here with details. Upasana.
Certainly a big development. Now, according to ANI, CCS has cleared Army's 10,000 crore Pinaka rocket deal, and this project includes area denial munitions and Pinaka enhanced range rockets. Now, this project will be divided between Solar Industries and Munitions India Limited. And also, it has been highlighted that DRDO is in advanced stages of making 120-kilometer strike version of Pinaka rockets and expects the first test next financial year. So on back of this development, Solar Industries will be in focus today, and I expect a strong up move in the stock today on back of this.
Okay, all right, got it. So Solar, we will watch out for that, Upasana. Let's go across to Manglam. Manglam, you're watching out for Allied Blenders today?
Always good to wrap it up with a drink, right? Great numbers coming in, firing on all cylinders. I mean, there are no complaints whatsoever. If you thought of a company that reported good revenue growth, that after saw gross margin expansion, EBITDA margins expanded, then the net profit was supported by lower finance costs. And to add to all of that, they've made investments in a new category as well. All of that happened for Allied Blenders in this quarter. Revenues up by 9%. Gross margins improved by nearly 700 basis points because the company has been changing its product mix and E&A sourcing as well. As a result of which, the EBITDA doubled from 6.6% margins. The company has reported 12% margins. And the company reported a 57 crore profit versus a loss of 4 crore in the same time last quarter. Finance costs nearly halved because they had taken money for the IPO to repay debt itself. 13% volume growth is what the company has reported in their P&A segment, and P&A accounts for nearly 42% of sales. P&A is basically prestige and above premium products. Add to all of this, this was a company that made whiskey and a bit of vodka. They've gone ahead and invested 9 crore in a company which makes dark rum, premium rum as well. So all these things should work for Allied Blenders today.
They've all done well, haven't they? From what I remember, United Spirits, I think Radico's numbers were pretty decent, and now Manglam's Allied is also good.
He also said we'll wrap it up with a drink, so we look forward to that Manglam post the budget.
Well, I was speaking about people in general, Nigel, but two things that really worked well for the alcohol companies this time around. One is the seasonally strong quarter. Secondly, Andhra Pradesh opened up as well, right? So that added about 400 to 500 basis points of volumes for all these companies. And then there was some pricing, benefits coming in as well. So all of that impacted their margins too.
Got it, Manglam. Let's see when Manglam opens up as well. Thanks a lot for that. Well, time to do a quick recap of all the stocks we discussed. The ones with positive news flow: Bajaj Finance, SRF, Hitachi, you had Blue Star, Allied Blenders, as well as Solar Industries. Well, the ones with negative news flow: Tata Motors, Maruti, Voltas, and Whirlpool. That's all the stocks that we're discussing, but Manisha joins us to tell us what's going on in the commodity space. Manisha, take it away.
Well, thank you so much for that, Nigel. I'll start with the crude oil prices, where we have seen prices continue to decline, so much so that we are now trading at the lowest level of 2025. Well, we have seen the U.S. inventories gain, and that is what is weighing onto the markets right now. Apart from that, the Libya supplies have come back, and it is the OPEC and allies meeting on 3rd of February, and that is exactly what the markets are watching out for right now. But in the metals as a sector as well, it really is a decline across. After the U.S. Fed meeting, we've seen the U.S. dollar strengthen, and there's little guidance that U.S. is given on future rate cuts as well. But Bank of Canada has cut interest rates, and ECB could be following suit this week itself, and that perhaps is giving some bit of a support to the gold prices. But when you look at aluminum, well, we have seen a decline. Copper is trading at a 3-week lows as well. Iron ore prices have declined too. So not much of a support that we are looking at in many of these commodities ahead of 1st of Feb, and that tariff clarity perhaps could lead the prices.
All right. Thanks very much, Manisha, for that. So that is commodities there in focus. We'll come back with the management of Quest Corp to talk about their third quarter and, of course, outlook going forward. Stay tuned.